What's happening, y'all? This is our study of advanced fundamental analysis, and this week's discussion is going to be on payables and receivables. So, we all know that on your balance sheet, companies account for accounts receivable as well as accounts payable. So, we know that those accounts receivable is money that the company is owed. So, typically, you'll find the receivables ratio or the receivables number in the current assets section or the assets section of the balance sheet, whereas the payables ratio is money that the company owes, and that will be found in the liabilities section. So usually those liabilities are short term, so it will be current liabilities generally is where you find that number. So we've been looking at Apple. Go to its financials, and we'll pull up the balance sheet for Apple, and we'll see if it lists those numbers on here. Let me collapse these because they just kind of get in my way. Yep, so trade and receivables. There we go. All that stuff. Total trade accounts receivables. There's that line item here on Apple. So then scroll down to the liabilities section, and we should have payables. Yep, there we are. So those are total payables or accrued expenses. All right, so calculating the receivables ratio. So the receivables ratio will let you know at how efficient the company is at collecting monies owed uh, from maybe customers and stuff like that. So um, that that um, that calculation, that formula is relatively simple, and Morningstar fortunately calculates that for you, but just for your own personal knowledge. If you're anything like me, I like to know how to calculate things on my own. So it's net credit sales divided by average accounts receivable. So net credit sales. Net credit sales is the same thing as your gross income. Because that gross income accounts for, returns and things like that, which is under cost of goods sold. I haven't seen any income statements really break down the cost of goods sold or the cost of revenue. It just usually lists it as one line item. So yeah, so you take your not cost of goods sold, sorry. You take your gross profit and you divide that by your average accounts receivable. So you take the current accounts receivable, add it to the previous year's accounts receivable, and divide it by 2. That gives you your average, and then you divide that into the gross income, and then that'll give you your accounts receivable. And we'll look and see what that is for Apple for 2019. That was 11.28. You can also figure out, how many days the Apple collects, or yeah. So you can calculate the number of days, how many days it takes for Apple to collect those payments, and so you'll take 365 and divide that by 11.28, and that gives you your days sales outstanding. So every 32.2 takes Apple about 32.35. So about a month, a little bit over a month to collect on those sales outstanding. So um, compare that with compare that number with competitors. Excuse me. Compare that number with competitors to see where Apple stands as far as how efficient they are with collecting on monies that they are owed. Moving on to the payables ratio, that tells you, again, like I said, how often or how efficient Apple is at paying what it owes, whether it be suppliers and things like that, manufacturers, etc., etc. So this one can be a little more tricky than the receivables ratio, um, just in verbiage really. So you take your total supplier purchases and divide it by the average accounts payable. Remember, the average accounts payable, like I said, you're going to find that on the balance sheet. You have to do a little math. So if we're going to do the average accounts payable for 2019, we want to take the 2019 number, add it to the 2018 number, and then divide it by 2. That gives us that number. But your total supplier purchases is simply the cost of goods sold. Um, so you take your the cost of goods sold, like I said, that's your cost of revenue. You find that in the income statement. Um, it's one of the top line items on the income statement. So let's just pull that up and see what Apple is. So cost of goods and services, total cost of revenue. There we go. Have it listed there for Apple. Scroll over, and 2019 is 2019 is here. So total cost of revenue is almost $162 billion. So you take that number and you divide it by the average accounts payable, and that'll give you that uh, payables ratio. And so you can take that payables ratio, divide that into um, 365, and it'll let you know the number of days uh, it takes Apple to pay its suppliers. So for 2019, that is 115 days. So their payables is probably somewhere between 2 and 3, and that's without me doing any calculations. So probably less than. Well, let's see. 365 divided by 115.2. So actually, it's almost 3.17. So a little over 3 is their uh, payables ratio. So again, we can't say definitively whether that's a great number or a bad number without investigating the same uh, numbers for its competitors. So it's always, always, always good to do that, as it gives you a better picture of your case study's standings among its competitors. So um, that's pretty much it when it comes to those two ratios. Uh, I believe that's all I have. If you guys have any questions or concerns or comments, feel free to leave them. I'm happy to field any kind of discussion on these things. But thanks again for watching, and I'll